Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, August the 14th, 2013. We're going to look at a couple different charts today. One, I'm going to just do a follow-up, and then the other one I'll actually do today's chart. Remember, I just show you guys one a day, so I'm just tossing this in just to give you guys a little heads up. But anyway, the other one we look at will be the U.S. market. We'll look at one of those charts. But the main thing right now, looking at the BSE, the India Bombay Stock Exchange. Bring up the tools right quick. All right, here we have this overall trend was moving lower series of highs, lower series of lows. We just kept doing this pattern here. You'll notice when you came down here, you're looking for some kind of strength here at the 50-period moving average. You don't get that. You start getting sell signals like you see here, and then you start being bearish. You want to keep with that bearish pattern, the lower series of highs, lower series of lows, because it's not actually finished, not actually found a bottom yet. And then she starts to move lower, goes below it, comes back up, tests it, finds resistance, and bounces off it, and then we get a higher high. All right, just because you get a higher high doesn't mean you get bullish. You have to wait for that test, and that means you have to fall back down and test the low. In this particular case here, we spotted the overall chart formation, this rising wedge formation, which is bearish, and whenever you see that, so whenever you look at that, you can see that the close below that was the actual confirmation of that pattern. It would have been a great sell signal. We also, the day before, gave you confirmation of the previous candlestick formation, which was a sell signal as well. I took that one, but either way, however you did it, it was a sell opportunity. Looking for a test of this one. We told you when that was happening, and that was what was going to happen. So that's exactly what happens. We come back down here. Again, we note to see what happens at this 50-period moving average, and you will see in this particular case, we simply close right below it. Nothing going on here. We bounce off these for about a day off the 200-period moving average. You get a move to the upside. We close very bearishly back to the downside again. And so again, we just keep watching, and we get another day to the downside, and then a sell signal, another day to the downside, and then we get a hammer candlestick formation. And that note again, low point here, the previous low, and then we bounce off of that. We just basically tested that low, found support, and then we start to bounce off it. We get confirmation here. We get a higher high than we've seen the day before, higher low, etc., etc. We told you that time period that was a buy signal. You should be a buyer here. We also told you at this point that you'd look for this to do a couple different things. One would be that it could go up here and just keep going and test the previous high. Another one is that it would go up here and then stall at the 50-period moving average. Remember, like you did over here, when you close below that 50-period moving average, you bounce up to it, you stall, and you fall away from it again, going lower. That could happen here again. So here's what you should do at this point. If you're not comfortable with that potential risk, you advance your stop, lock in gain, or just take your profits, whatever you want to do with it. But this is where your best target was, and that's where you've now had it. So you can keep watching, see what happens, what forms here. But at this point in time, it's not as surefire as this was down here. This is an easy call to the upside. You've made it several hundred points to the upside there. Take some profit, and then see what happens next. If she continues to rally to the upside, stay with it. Keep advancing the stop as she moves higher. And if she doesn't, if she starts to move sideways, keep a tight stop. And then if she breaks to the upside, that's fine. That's one of the ways that could happen. Or if she starts to roll over here like that, then you'll see that at that point, you'll see this is a first shoulder. You've just done this number. Then you make the head formation by going higher and going lower again. And then the second shoulder, which peaks out at roughly the same level as the previous shoulder. And that's the typical textbook head and shoulders formation. At that point, we would simply measure the distance between, we'd look at the neckline, like so. Let me clean that up so we can get this a little bit clearer. What we do is we get the neckline by the lowest close, will be roughly here and here. When we draw a line between those 2 points, that would be the neckline. So we'd have the shoulder here, the head, and then the second shoulder formation would look like that. And what would happen here is we would watch, and when we come down here and close below the neckline, once we've closed below that, we would measure the distance from this high point down to the neckline, measure it out mathematically, then subtract that number from this breakout point here, and tells us how much lower price will go before we find support again, or another bounce or some kind of inflection point. So that's something that's set up here that I wanted to bring to your attention. Now let's go look at today's chart. Okay, as you guys know, I've just looked at the BSE, the India Bombay Stock Exchange. That was the one long opportunity I saw in the overall averages that I really liked. And then everything else is much, much weaker. Now we have some conditions in certain charts that were some bullish patterns setting up, but you'll notice those are all commodities, and so keep that in mind. When you look at individual stocks, you're not seeing that same degree of strength. And when you look at commodities, you are seeing that. So that's important to take note. People have been confused. Wait a minute, you were bearish and now you're bullish. And I'm not getting bullish on the indexes. What I'm doing here, you'll see I've actually gotten bullish on gold, silver, oil, and things of that nature. And then, of course, there was that one long opportunity on the India Bombay Stock Exchange. But again, I told you when that happened, that was more of just a knee-jerk reaction that you were going to see that bounce. That was money you could be made there. And then at that point, we may see what develops. We may actually continue to move higher, or we may break down. So when we're looking at the U.S. markets, I haven't gotten any bullish move here because there's just not a good quality signal for one. What we had was this series of lower highs and lower lows that were going on for a bit. And then we came up here and we made a new high. Well, all right, and that's fine. You made a new high. What do you do next? That's what's going to matter, because you have to come down here and test the low. That's the reality of it. So what we see here is you actually have this move. You come up like this and you just start to roll over. All right. This doesn't give you anything to play with. This little tiny one down day hammer candlestick formation. That's nothing you can play with. And you come down here and then we get a day to day upside. But it doesn't make a bit of difference when you have the ultimate oscillator high point here and then lower here. This is trending down. The same time period, you look at price activity is trending up between these 2 points here and here. That's bearish divergence. Says this is nothing to, it's not going to last. It's going to fall apart. And that's exactly what happened. Now what we want to do is watch this and see what it does down here at the 50 period moving average. Remember, over here we close down below it. Okay, we bounce up to it, we ricochet off, but we consolidate, very tight little pattern, and then break to the upside again. Now I want to watch here and see what happens. If we get a bullish setup, like you're going to do it again or something like that, you're going to have another move to the upside and test this high. It's possible. Then you can, assuming that the situation sets up properly, you could take that as a long opportunity. Doesn't mean you're bullish on the overall long-term picture or the mid-term picture. Just means you have a signal that could be a bullish one to the upside to test the previous high, and you could make some money in that little move. Right now, we see this chart as being very bearish. There's nothing here to be buying here, and that's why we're not marking the chart as being something like that. And again, like I said, the only pattern that we can see in this chart is a rolling over, and that's never bullish. That's always bearish. So whenever you have that condition, you have to have a bearish bias. In this case, we do. Okay, this is the Dow Jones Industrial Average weekly chart. This is 2 years, and every single candlestick represents a week with the trading activity. So when you're looking at this chart, what you want to look at, and again, it's very important to look at weeklies as well as the shorter-term 3-month dailies, because the longer-term charts are more powerful. So if you're getting sell signals on a long-term chart, that's more important than if you're getting a sell signal on a short-term chart, while at the same time you got a buy signal on long-term. So of course, the long-term would carry more weight. So in this particular case, I want to show you that what we've done, we've come up here, we've made this high, get a sell signal, we sell off, okay, we bounce again, we make a higher high. Note the high close here, higher than the previous one here, so you got this little uptrend line going here. But again, look up here at this high point on the ultimate oscillator. Low point, the high point there is higher than this one here. So you can see that this is telling you that this is not sustainable. It's going to get erased. Just like we saw on the short-term chart, you're seeing the exact same thing on the long-term chart. So we expect this is going to come back down here and then just erase itself. And we may see other things develop, but right now you have to have a bearish bias in this move right here. You just can't be bullish from what we've seen thus far. And again, I want to point out that this uptrend line from here, here, and here has held. Let's see if it does again. It's going to be tested, so let's see if it holds or if it breaks down. Right now, you are currently flirting with that level right now. So if by the end of the week we sell off or something of that nature and breaking through it, that would be again bearish. Right now, the candlestick formation, and again, it's a weekly candlestick formation, so what it's doing on Wednesday doesn't make a lot of difference. It's really going to be what it closes on Friday. But right now, what we see is a sell signal. So again, right now, I'm just watching the U.S. markets to see if we're going to get our breakdown at this point. But I am still bullish on a couple of the others, but they're all commodities. Okay. Okay, for those of you who would look to find my short-term 3-month daily or my long-term 2-year weekly charts, they're right there on the free website at perfectstockalert.com. You can simply scroll down on the home page there, and you will see that there's the global market charts right there. You can click on either one, and they'll pull up the one. And again, I update these charts, the 3-month daily and the 2-year weekly, which is right beside them. I update them nightly, so you can see my annotations as well as any chart formations that I see forming, and pivot points with the blue arrows telling you when the chart is likely to rally to the upside or break to the downside, and so forth and so on. Okay, so check it out. Again, they're updated daily, and I'll see you again tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.